Welcome to Finance with Justus. I'm Justus. A lot of the times you see analyst estimates. Oh, there's 100% upside from analyst estimates. But should you actually pay attention to those? Will following analyst estimates actually increase your returns? Me and a lot of other investors think no. The first important thing is those analyst price targets are usually for like 1 year or 2 years. No one knows if, for example, Apple stock will be up 10 or 20% in 1 year, or if it will go down 50%. No one knows it. Not Warren Buffett, not you, not any AI, not any technical trader. No one knows it. So 1 year price targets, etc. are already useless. My wonderful company isn't as high as I thought it would be, time to sell it, and then it skyrockets 2 years later. This is not how investing should be. You shouldn't watch where a stock will be in a year. Another reason why you shouldn't listen to analysts is because of the way the job of an analyst works. Because the job of an analyst is not to be 100% right. The job of an analyst is not to be bad enough to get fired. He needs to always support the popular idea. Let's say if he says, oh, this stock which is hated by the market for right now, I think it is worth a lot more. Then the boss will be like, we can't publish that, no way in hell. I'm gonna give you the example of Carvana. Carvana is a company which sells cars in a vending machine. Already revolutionary business. Here's the example of the analyst, which name I'm gonna butcher 100%. Amintas. Maybe that's the reason why he was fired, but anyway. He had a $23 price target while the stock was at 200. Well, when that happened, he was fired and replaced with Adam Jones, who quickly raised the price target to $400 and said it's one of the greatest companies. To give you an idea, it's currently trading at around $10. So it was already off the price target of a former analyst, but to be fair to even him, he did a great job because he saw it is clearly overvalued right now. Analyst estimates are not usually to show you buys and sells. It shows you what the market thinks. That is what analysts do to not get fired and to be credible. I'll give you an example with PayPal stock. This is PayPal versus the stock price target from UBS. It moves a lot. It always goes up and down, and as you can see, always with the market sentiment. So if you follow analysts, they will not tell you what will happen. They will tell you what the market bakes into the stock. Of course, there will always be some good analysts, like the one I just showed you. If I give you 10 M&Ms and 9 of them are poisoned and 1 of them gives you a great return, you wouldn't just nom the entire 10 M&Ms. This is the same just like why hedge funds are performing badly. They always follow the market. And most importantly, why would you even want to follow someone else's ideas? Even Warren Buffett doesn't advise you to buy after him, because people buy companies for different reasons. Let's say an analyst gives a 100% increase on the stock. But let's say the stock falls by 10% and the analyst says, oh, never mind, it's worth basically nothing. Sell. Won't you just panically sell? Or what if a stock just falls by 10% overnight and the analyst still says, oh, it's worth that much, but you're getting nervous because you don't think it's that much worth. The analysts think it's that much. To be able to hold a stock, you always need to have your own idea on the stock. You need to know what the business does, you need to be convinced that it's worth that much, and you shouldn't just follow someone else blindly into something. As good as Warren Buffett or Charlie Munger may be, I never blindly bought after them. You always need your own valuations and insights into a company. The only way you should see analysts as Mr. Market. Mr. Market is very irrational and from time to time makes big mistakes. For example, when he believes that a cash-eating car vending company is all of a sudden worth $40 billion. Maybe you should say, Mr. Market, you're a bit wrong about that. Never follow people blindly. It is your hard-earned money. You don't need to throw it away. You need to be confident that you are able to sleep at night with what you have in your portfolio. Did you ever follow an analyst price target? Write it down in the comments. Have a good day.